All right, welcome to today's meeting. Today's meeting is going to be exceptional, wonderful, and a lot of things are going to be learned in this class right now, in this meeting. So, I promise I'm going to be listing a whole lot of things concerning candlesticks and the chart about trading on this same channel. So, today we're going to be talking about candlestick formation, or you say candlestick pattern in the market. Now, most of us have been hearing or listening to tapes and so many things about candlesticks, how it works. Some of us that have been in the market, you've been using it, and some of us coming into the market for the first time, you are just coming for the first time, or you just want to start trading, you don't know about candlesticks. Yes, but you've been hearing about it. But today's class is an eye-opener to all about candlesticks. After today's meeting on candlesticks, you will be able to use the candlesticks to make predictions and analysis in the market. Now, initially, chart was not represented with candlesticks. Just as people talk about candlesticks, the way people use candlesticks today, chart was not represented with candlesticks initially before now. Chart was represented with what we call line chart. It was a line chart. From line chart we got to bar chart before we got to candlesticks. But over time, candlestick has proven to be the best. Over 90% of traders cannot do without the candlestick. They must make use of the candlestick. What do I mean? Candlestick is very exceptional in trading and very good in trading. Very wonderful in trading. As a matter of fact, candlestick is my cheat code. Candlestick is the best. Candlestick is what I do, and candlestick is what I use. All my life revolves around candlesticks. Now, candlestick is just for price representation. It's just for price representation. It's as a result of what happens in the market that forms these candlesticks we use, whether the buying candlesticks or the selling candlesticks. Don't worry, I'm going to tell you the difference between the buying candlesticks or the selling candlesticks. So, candlestick, you cannot be a technical trader, a modern day technical trader, without using the candlesticks. When I started trading, I started with the chart pattern, candlesticks, and a whole lot of things. But I bet you, even as a professional trader right now, I still make use of candlesticks in my on my naked chart. So candlestick, for you to trade profitably, you got to understand what candlestick is and how to judiciously make use of it in your favor. I bet you if you understand candlesticks, or the ability for you to understand candlesticks, you have solved 50% of your challenges when it comes to technical analysis. Is a cheat code. It's a cheat code to your trading. Now, for today's class, I've shared to us that candlesticks is just there for price representation. Now, there are two types of candlesticks in the market. Two types of candlesticks in the market. We have the bullish candlestick and the bearish candlestick, as shown on the slide. Bullish candlestick and bearish candlestick. What do I mean by bullish candlestick? Bullish candlestick is a buyer's candlestick, while a bearish candlestick is a selling candlestick. That is, those candlesticks that dominate the chart when the chart is going up, they are known as the bullish candlesticks. And the bearish candlesticks are those ones that dominate the chart when the charts are going down. Regardless of the color, you can choose the color. I decided to use the green and red here while preparing this, because that's the common um candlestick colorations we have. But you can decide to use black, you can decide to use whatever color you wish to be your bullish candlestick or your bearish candlestick, whatever color whatsoever you want to use. But for the purpose of this class, I'm going to be using the green as the bullish candlestick, or representing the buyers, while the red representing the sellers. So it's very nice and it's very good when you understand or gain full knowledge of what you are listening to right now. Now, when you get your chart, now let's go to the chart. Let's open this. Now you find different candlestick coloration. You find either the green or the red candlestick, either the green or the red candlestick. Now the green one, I use the green one to represent the buying candlestick or dominated by the buyers, and I use the red to represent the sellers. Now let's go back to the candlestick itself. Now I say there are two types, which is the bullish and the bearish. Bullish represent the buyers and bearish represent the sellers. Now every bullish candlestick every bullish candlestick opens below and close above. I come again, every bullish candlestick opens below and close above. So this is the diagram or how a bullish candlestick, a typical candlestick, this is how it looks like. I have to take my time to prepare this. So this is how a typical candlestick looks like. You can see bullish, you can see the green candlestick, the open is below and the close is above. Why is it like that? Because the bullish candlestick is the buying candlestick, and when they say a market is buying, that means it's going up, and for something to go up it has to start below and keep going above, or whether it closes above. So it's called bullish because it opens below and closes above. That's for the green candlesticks. Now you can see where they wrote the high and the low. This high, or what you see, or what you see there like a line or like a thread, is known as the wick. At that high, that stuff that looks like a thread is known as the wick or shadow. Same as the low here, where you see like a thread, is known as wick or shadow. What do I mean? When you go to your chart, let me take us to the chart. You see all these things that looks like a thread. You trying to use it for we to understand. All these things that looks like a thread is known as wick or shadow, not the body of the candlestick. The body of the candlestick is still the same thing you find here. You can see the real body, you can see the real body of the candlestick, you can see the body of the candlestick, how it is shaded. Look at it, real body of the candlestick. That is a place that is full and occupied with either the green or red. But the place that is not occupied, whether with the green or red, is known as the wick or shadow. Now if you look at the bullish candlestick, you can see the low and high. So market opens low and close above for the bullish candlestick. Why for the bearish candlestick, market opens above and close below? Because for a market to be said to sell, or for a market to be selling, it has to start above, closing below. It has to start above, closing below. So this is the high, you can see the high there, you can see the low. So that is what candlestick looks like. So there are two types, the buying candlestick and the selling candlestick. And when you look at the chart going down or moving in a down direction, is usually dominated by the red candlestick or the bearish candlesticks. And when the chart is going up, it's dominated by the buyers or the green candlesticks, just like what you find here. um okay, now look at this. This NZD USD, I'm sharing from my for those of us using the cell phone. Now if you look at this, the chart is going down. What candlestick colors dominate? The red candlestick, which shows the sellers. Now in a situation you find the chart going up, just like this, is dominated by the green candlesticks. That means the market or the chart is also actually going up. So I use the green to represent the buyers, then the red to represent the sellers. Do well to understand this, because the understanding of this will actually make you to make money in the market. Will give you a whole lot of money in the market. Will give you a whole lot of money in the market. So the first, there are different types of candlesticks. There are different types of candlesticks. So the first type of candlestick I'm going to be talking about is known as the doji candlestick. It's known as the doji candlestick. The doji candlestick. The doji candlesticks. Everything I'm going to show you here, or everything I'm teaching you here, they are all practical. So I will show you on the chart, show you how it looks like on the chart and the rest. Now, what does a doji candlestick looks like? What does a doji candlestick look like? Now a doji candlestick is a candlestick where price open and closes at the same price. Price open and close at the same price. Price open at the same price and close at the same price. What does that mean? If you look at this, it looks like a plus sign. Looking at this, it looks like a plus sign. Looking at this, it looks like a plus sign. Now, it can close at the same price or approximately at the same price, regardless of the column. What does that mean? It actually means the market opened somewhere around here, and the market tried to buy. If you look at the middle candlestick, that's what I'm trying to talk about now, the place that has a horizontal line crossing the vertical line, so that looks like a plus. So if you look at there, it actually means the market opened at the middle, bought to the top, but the seller say no, 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 we can't accept the high prices or higher prices. They rejected the higher prices. They try pushing the market down below the cross, or the below the horizontal line crossing the vertical line at the middle. So they try selling the price to the base. Buyers say no, 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 we can't hold the lower prices. And at the end of the day, after much struggle between the buyers and sellers, market closed at the same price it opened, or approximately at the same price it opened. So as a trader, when you spot something like this, what do you think? As a trader, when you spot something like this, how do you trade it? As a trader, when you spot something like this, how do you capitalize on it and make money? How do you interpret it? Now, the ability for you to understand candlestick will make you have an edge in the market. It will help you to interpret what buyers and sellers are trying to do. Now, with this explanation I just made, the market bought to this particular highs but got rejected by the sellers. E sold to this particular low, got rejected by the buyers, and market closed at the middle, or approximately at the middle. It's actually telling you that there is a struggle in the market. In other words, a doji candlestick shows indecision in the market. Indecision in the market. So when you spot a doji candlestick, either at the support zone or at the resistance zone, what do? You don't enter the market, you stay away from the market. You stay away from the market until you have a candlestick confirmation, until another candlestick opens and close, whether above or below. Until another candlestick opens and close, whether above or below. Let's say you spotted the middle doji, or even the one on the left or the right. You have to wait for another candlestick to come up and close above, a bullish candlestick to close above if it's on the support zone, another bullish candlestick to come up, closing above with a full body. You can now enter the market for a buy. And if it closes below, if a bearish candlestick closes below, if and the doji is at a resistance and in favor of the trend, what do? You can now enter the market for a sell. So that's what we find. A good example is this. You can see doji at a resistance. You can see the middle one circled. You can see it. After the doji was found at the resistance, you don't enter the market. You don't enter the market. You wait for a confirmation. If you look closely, you can see it. You can see it. A bearish candlestick, which is the selling candlestick, confirmed for a sell. The selling candlestick confirmed for a sell. You can see it. Another candlestick closing below the doji. A red candlestick closing below the doji. And at the end of the day, what happened? The market sold. So that is it. You can also see something like that here. So let's move over to the chart, see if you can find it. So we move over to the chart. What you are doing here, we got to understand it properly. So we move over to the chart. We are trying to get a doji that actually worked out. This doji, ability for you to understand it, or for you to understand what is happening in the market, will actually give you an edge, or will actually tell you what is happening in the market. We actually tell you what is happening in the market, in the market for the perfect doji. I'm trying to get a good and perfect doji for us to use. Now look at this. You can see here, now there are some situations you find two dojis either at the support or resistance zone. A doji is a doji whether they are 2, 3 or 4. Keep watching until you have a confirmation candlestick, either closing above or below. You can see dis dojis here, no matter the colour, whether the colour is red or the colour is green or it's a perfect doji, that means no coloration. What do? You wait for a confirmation, and looking at this, you can see that there was a confirmation above and the market actually bought. So if you actually have this knowledge, you can see after this doji, a close above, look at the buy in the market, a good buy in the market. So having this knowledge will actually give an edge in the market. Now look at this, there was a doji here at the resistance zone and a close below, and at the end of the day, the market sold. The market sold. Now look at this doji here, look at it, doji here, and the close above, and at the end of the day, the market bought. Let's see if we can find more. Let's see if we can find more. Okay, let's go to other charts. Let's go to other charts. So we just open the Euro USD chart. For this particular type of doji, let's see if we can spot it. We can also go to the, you can also change time frames. You can also change time frames. Now look at this. After this formation, there was a close below, and at the end of the day, the market sold. At the end of the day, the market sold. Oh my goodness, look at this. Look at this. After this formation, after this doji, there was a close above, and at the end of the day, the market bought. So that is it for that particular type of doji. That particular type of doji I listed. That is it for that particular type of doji I listed. So if you also have more questions on this, you can chat us up or hit us up on our Telegram channel, or you can also chat us up on our WhatsApp. All you have to do is to check the description, just like what you find here, the places I circled. So that's it. Now look at this particular doji here. You can see it, and there was a confirmation. At the end of the day, the market sold. Now look at doji at the support. Yes, doji at the support. At the end of the day, the market bought. There is still another type of doji known as the gravestone doji. There is still another type of doji known as the gravestone doji. And how is it? It is something like this. Now look at the one I circled, the one on green. It's a situation where the market actually bought, and at the end of the day there was a rejection. Now before I go ahead taking you on the other types of doji, before I go ahead taking you on the other type of doji, now when you spot a wick, remember I told you this is a wick. The places that are not occupied with the body of the candlestick is known as a wick. Just like this place, you find the high and the low. So that thing that looks like a thread is known as the wick or shadow. It actually means that the market actually got to that place, but it rejected. So there are things you have to look out for in a candlestick. Number one, the body of the candlestick. The body of the candlestick. The body of the candlestick shows momentum in the market. The body of the candlestick shows momentum in the market. Why the wick of a candlestick shows rejection in the market. Now, how rejected a candlestick is very important in the market, because it will help you to take sentiment or to take direction in the market. How rejected a candlestick is very important. Now if the rejection is much, It shows that something is about to happen in the market, and the body of the candlestick shows momentum of the market. Now, having established this, that a wick shows rejection, the place they wrote upper shadow, shadow simply means as wick, it's still the same thing as wick. Where you find a thread up is the same thing as wick or shadow. So how rejected your shadow is or your wick is very important in the market. It's very important in the market. So that brings us to gravestone doji. A gravestone doji, look at the place circled, actually means that the market bought to this particular highs. Where you find that thread, you can see the wick, how long the wick is, just a small body below. Now it actually means that the market bought to the top of this wick or this thread, but at the end of the day, before the close of that particular candlestick, there was a rejection below. There was a rejection below. There was a rejection. That means the market was rejected or the candlestick was rejected by a huge group of persons, but by the sellers. Instead of the body closing above, it left a big shadow or a big wick in the market, just leaving a little body below. It actually means that the market bought to the top, but sellers rejected the higher prices. With this, you'll be able to understand the market. Now, whenever you see this type, where the market bought to the place, but there was a rejection, a high rejection, leaving a high wick with just a small body below, is simply telling you or showing to you that there is a change in direction, especially at the resistance zone. How long the wick is also counts. You can see that the wick here is very important. Now, when you spot this type, this particular type is known as the gravestone doji. You can see it here. It's known as the gravestone doji. So when you spot this type, you either wait for confirmation depending on the currency pair you are trading, or you immediately enter the market. You immediately enter the market depending on your strategy. Some persons would like for confirmation, or you immediately enter the market. You can see it here. The wick was actually long. So let's go to the chart, see if we can spot something like this. So we move over to the chart. Before going to the chart, I would like to take the direct opposite of this gravestone doji. Now look at this. Look at this. Look at where it was found. You can see it pointing with a long wick and small body below. It's known as gravestone doji. At the end of the day, there was a confirmation below. There was a confirmation below, a close below. And look at sell, sell, sell. The market showed hell. Look at it. Look at it. You can see that it's not like the regular cross that crosses in the middle. This one is below. It actually means that when the market was buying, the market bought, dominated by the green candlesticks, dominated by the green candlesticks, kept on buying, kept on buying, kept on buying, kept on buying, kept on buying. But when it got to the top here, there was a good rejection by the sellers. You can see it here, the arrow pointing down. There was a good rejection by the sellers, and at the end of the day, there was a confirmation here below. And you can see the good sell, 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 sell. At least it gave out some pips in the market before making a reversal. Then the direct opposite of this gravestone doji is known as the dragonfly doji. Before going to the chart to spot it, dragonfly doji. Now, how is this dragonfly doji? It's the direct opposite of this gravestone doji, the direct opposite. That means the gravestone doji, for it to be good enough or for you to use it, is actually found mostly in the resistance zone. So the direct opposite is seen at the support zone. Look at it. It's still a cross. Dragonfly. Remember your regular dragonfly that flies around during rainy season. It just flies around wee with like a butterfly, but it's not a butterfly. Look at it here. Dragonfly doji. Now look at it. Dragonfly. Sometimes you're able to get the perfect dragonfly doji. Sometimes it's not that perfect. So let's go to the chart to spot something like that. Ooh. Now for it to work for you, for all these candlesticks to work for you very well, for you to use them properly, you have to draw them or spot them at a sensitive support and resistance zones. At sensitive support and resistance zones. You have to spot them at sensitive support and resistance zones, and you must always trade them in favor of the trend. You must always trade them in favor of the trend, not against the trend. According to my hierarchy, the trend comes first and every other thing follows. The trend comes first and every other thing follows. So let's see if you can spot it in this. I've seen one, a good one. You can see this. You can see this. This is the good dragonfly doji. The good dragonfly doji I posted or I showed you on the slide. The good dragonfly doji I showed you on the slide. You can now see it, and at the end of the day there was a bullish confirmation. There was a bullish confirmation, and the market bought and bought. Most times you have to wait for the confirmation depending on your strategy, and when the confirmation is not there, you abstain from the market. But there are some strategies that requires you, as you are seeing the dragonfly doji, you quickly enter the market for a buy, and as you are seeing the gravestone doji, you quickly enter the market for a sell. Now let me quickly show you the one that is happening or that just happened today. Okay, um let's see if we can spot some other type. Now it must be in favor of the trend. I said it before and I'm saying it again. It must be in favor of the trend if you want it to work in your favor. If you want it to work in your favor, this is a cheat code. Candlestick is a cheat code that will help you to be extra profitable in the market. Not only profitable, but more profitable in the market. I use it. That's my secret of profitability in this same market. So let's quickly check if we can spot if you can spot. Now look at this. This is not a good a perfect one, but at the end of the day, what happened? The market bought. After forming this dragonfly doji, there was a confirmation above. There was a confirmation above. After the confirmation above, what happened? The market bought and bought and bought and bought and bought. Now look at what's happening. So for somebody who understands all these secrets I'm revealing right now, will be able to make judicious use of it and cash out a good reasonable money. A good and reasonable money. Don't tell no one. It's just a secret. Now look at the doji I introduced to you. After this confirmation, what happened? The market sold. So this is a very sensitive market that everybody, a pattern that everybody have to know if you want to be profitable. If you don't know candlesticks, I don't know how you wish to be profitable trading the forex market. So understanding candlestick alone will give you an edge in the forex market. So we quickly go over to the next type of candlestick we have. We have the hammer. Yeah, the hammer. You still remember your hammer? The hammer you use in hitting your doors. Let's say you've used hammer before, or hammer you use in your normal hammer you use in breaking things and the rest. Whenever you want to break things, yes, forget about the names. My candlestick names, they are very sweet and nice. Whenever you want to break something, the first thing you go looking for is hammer. Oh, how do I get this hammer to break this stuff, or how do I get this hammer to break what I'm looking for? So hammer is very important in trading. It also shows you the rejection in the market, and it's usually found at the support zone. It's usually found at the support zone. Hammer is usually found at the support zone. Take a good look at it here. This is a good example of hammer I'm talking about. This is a good example of hammer I'm talking about. Look at it. Look at the way it's highlighted. So let's go to the chart. Okay, look at it before we go to the chart. We go to the chart. Look at it. You can see how it is like your normal hammer. There was a rejection below. Whether the color is green or red, it doesn't matter. There was a rejection below. There was a rejection below. It actually means that the market sold to the down part. By the end of the day, there was a rejection by from the buyers, and the market bought and bought and bought. Here too, there was a rejection from the buyers, and the market bought and bought and bought. So this is it for hammer. Now before I go showing you on the chart, I would like to show you the direct opposite of this hammer, which is known as the shooting star. Shooting star. Now take a good look at this. The shooting star is different from the gravestone doji, but is the direct opposite of hammer. It's just like an inverted hammer. You can take it as an inverted hammer, and is usually found at the resistance zones. At the resistance zone. So if you watch here, the market actually bought to this particular place or at the top of the week. By the end of the day, the market was rejected, or the sellers rejected the higher prices, and you can now see what happened. The market closed like a gravestone doji. And when you spot this kind of market or this kind of candlestick, you can either sell immediately after the close of that particular candlestick, or you wait for confirmation, depending on the strategy you are using. Depending on the strategy you are using, that's what you do. You can now see the shooting star. Shooting star. So let's quickly go to the chart and see if we can judiciously spot it on the chart. So move with me, because what we are doing now is practical. Yeah. So now you might not spot or see the one that is exactly, or that the one that is the same with that one on the slide. But when you see something like that, you should be able to know that, oh, this is a shooting star, or this is a hammer. So I've seen a whole lot of it. So let's see if we can spot it. When we see it, or when I see it, I'm going to show us. So we move. We move. Now, this was, for you to be profitable using candlesticks, you have to start somewhere. You have to start somewhere, applying all these things. Now look at this. Look at this. Oh my goodness. Inverted hammer. Look at it. And at the end of the day, the market sold. You can see it. It's a cheat code. If you understand it, you understand. It's a cheat code on its own. The ability for you to get this and understand it will give you an edge in the market. This is a cheat code in the market. It's already a cheat code in the market. Look at it. After this confirmation, there was a sell, 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 sell in the market. Sell, sell, sell. And the market actually sold down to this place. Now, that's a shooting star or an inverted hammer. Now, let me get a good hammer. Let's see if you can get a good hammer in this same market. Let's see if you can get a good hammer, a hammer pattern in this same market. Now let's go to Euro USD. The Euro USD. Euro USD. Now, okay, let me not use that. I need a good hammer. I need a good hammer. A good hammer will help us to understand what I'm trying to talk about. A good hammer will help us to understand what I'm trying to talk about. So, whoa. So we move to USD card. We must get what we are looking for today. We must get what we are looking for today. We must get what we are looking for today. So we must see it. It's usually common. It's usually common. It's usually common when spotted, and it works perfectly well. So whenever you spot it, it's something like this. You can now see it, a hammer formation or a hammer pattern is something like this, and at the end of the day the market bought and bought and bought. This is the hammer formation. Yeah. So we move over to the next pattern. The next pattern here is known as the morning star. Morning star. Yeah. Don't bother, my candlesticks names are very sweet and nice. So morning star. Morning star. Now how is this morning star? Now morning star is made up of three candlesticks, and they are usually found at the support. Now before I go ahead, I would like to draw to our attention or telling us that a candlestick formation found at higher time frame is more reliable than the ones found in the lower time frame. I come again. The candlestick formation found at the higher time frame is more reliable than the candlestick formation found in the lower time frame. So when you spot a morning star in your D1, is more reliable than the morning star you spotted in your H1 or H4. When you spot a morning star in your H4, is more reliable than the one spotted in your H1 or 30 minutes. So the higher the time frame, the more reliable these candlesticks are. So depending on the type of trader you are, I wish whenever you wish to place a trade or whenever you wish to take a trade in the market, look forward to see them or this candlestick formation in your higher time frame. Look forward to look at them in your higher time frame. So this is a good example of what I'm trying to showcase to us. This morning star, and you can see it's made up of three candlesticks at the support. Initially you will get a bearish candlestick. If you watch here, the first candlestick red. Now the middle candlestick could be any type. It can even be a doji, small candlestick, but the first candlestick will be red at the support zone. Then the middle candlestick can be a doji but a small candlestick in size. Then you now have a bullish candlestick closing above, confirming it. Then you can now enter at the opening of the next candlestick. It's usually common on the chart. Now look at this. Look at this. This is known as morning star. You can see the three candlesticks. You can see them highlighted. You can see them. The first one bearish. The second one a smaller candlestick, bodied candlestick, could be a doji or any type. Then the other type is another candlestick closing above. At the end of the day, you can now enter the market for a buy. Now the direct opposite of this particular type of candlestick is known as the evening star. Now the evening star is a formation found at the resistance zone. The evening star is another formation found at the resistance zone, and is made up of three candlesticks too. You can see them. The long first body, that is the market must be in an uptrend first, and this type of candlestick shows reversal in the market. This type of candlestick shows reversal in the market. So the first type of candlestick is a long body candlestick at the resistance zone. The market must be buying first. At the resistance zone, you find a long bodied candlestick. Then in the middle, you find another candlestick in the middle. Then you now find another candlestick closing below the middle one. You now find another candlestick closing below the middle one. At the opening of the next candlestick, you can now enter the market for yourself. You can see the write up here we gave. You can see the write up here, long first body. the star, gap down, strong finish into first candle body. So you can see evening star characteristic, long first candle body, second candle star, short body gaps away from preceding candle, third candle body closes into body of the first candle. Now this is a good example of it on the chart. You can see the three candlesticks. You can see the three candlesticks. If this is the first one, second one, and the third one. The opening of the next one, you can now enter the market. And you can see that the market sells sold very well. These things I'm trying to show us, they are very important in the market. They helped us while we are struggling in the market then, and even up till now. As a professional trader, these are the things that gives me money in the market. Not only about the chart, not only you understanding the chart. This is another one too. Evening star, evening star. It doesn't matter, the one in the middle could be a doji or whatsoever. All these things, they are very helpful in the market. They helped us when we are still seeking, oh, what is it that we are going to do? How are we going to make profits from this market? How are we going to make ends meet in life? These candlestick formations actually helped us a lot in trading. So if you want to be profitable, trading with G-Wings, profitable trading with G-Wings, profitable trading with our academy, these things all together are called price action in the market. So we move over to the next type, tweezer top and bottom, tweezer top and bottom, tweezer top and bottom in the market, tweezer top and bottom in the market. Now looking at this, tweezer bottom is found at the support zone, while tweezer top is found at the resistance zone. I'm gonna be sending a video here about support and resistance soon. I'll be sending a video here about support and resistance. But tweezer bottom is found at the support zone, while tweezer top is found at the resistance zone. Now, there is one thing I would like you to put into consideration. Not that there is difference between tweezer top and tweezer bottom from every other type of candlestick you are seeing. Now look closely. When you look closely, you will find out that this tweezer bottom, the market must have been in a downtrend first, been in a downtrend, but at a particular time closed. You can see it closed at a particular low. Then the bullish candlestick now opened later to close above. But if you observe closely at the bottom of these candlesticks, you will find out that the bullish candlestick closed or opened at the same price that the bearish candlestick closed. There was no gap at all, unlike these other ones I showed us. This other one now, you can see after this one closed, there was a little gap before this number two candlestick opened. After this number one closed, there was a little gap before this number two opened. But for this particular type of candlestick, there will be no gap at all, whether to the up or to the downside. There will be no gap at all. Now look at it, the same price that the bearish candlestick closed, that was the same price that the bullish candlestick opened. That's where you have to put your concentration, or everything you have to put it into consideration for you to be profitable trading the forex market. You have to put everything I'm showing to you right now into consideration. So before you say a candlestick is a tweezer bottom at the support zone, the bearish one has to close below and the bullish one has to open at the same price that the bearish one closed. And at the end of the day, you can now see that there was a close above. So this is a good tweezer bottom, and that is how it is too. When you get to your tweezer top, the market must be in an uptrend first, buying, 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 buying. But at the end of the day, a bearish candlestick open at the same price that the bullish one closed, closing below. This is known as the tweezer top. This is known as the tweezer top. This is known as the tweezer top. So you have to put it into consideration, and it also shows reversal in the market. It also shows reversal in the market. So whenever you spot it, it's very key in the market, and it helps you to understand trading and trading profitably. So a good example, we find a good example on the chart here. You can now see this. You can see the market was actually selling. It was actually in a hand trend, selling, 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 selling. And when it got to this bottom here, there was a close above. But your consideration should be at the base. You can see that the bullish candlestick opened at the same price that the bearish candlestick closed. Where this bearish candlestick closed, the bullish candlestick immediately took it from there and closed above. At the end of the day, there was a buy, 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 buy in the market. So when you spot this, the opening of the next candlestick, do not wait for nobody. All you have to do is to go into the market and make that money, make those bucks in the market, and you see it move. You can see downtrend first. The market must be in a downtrend. The rules are already listed for you. The market must be in a downtrend. You must see a bearish candle. You can see downtrend first, which is number one. Number one, downtrend. You can see listed there, downtrend. Then the next candlestick, a bearish candle. You can see it here, number two. You see a bearish candle here, number two. Then number three, you see a bullish candlestick. Then the next one is a close and open and close above, and you continue the buy. So you can now look at another example here, another example here. Now you can now see it. First, number one, the market was actually in a hand trend. After that, we see a bearish candlestick. Then the next one, a bullish candlestick closing above and taking it off from there. So that is it for tweezer top and bottom. There are a lot of candlestick patterns. All you got to do is to keep practicing and practicing and practicing. A lot of candlestick patterns. But we end this, before we end this, I would like to introduce you to another type of candlestick known as the engulfing candlestick. Engulfing candlestick. Let me quickly show us on the chart how the engulfing candlestick looks like. Engulfing candlestick. Engulfing candlestick. Um, Engulfing candlestick. So I got to go to the D1 time frame. Here we have two types of engulfing candlesticks. We have the bearish engulfing and the bullish engulfing. Now, whenever you see market buying, 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 or something like this, um, now look at this properly. The market got to this particular place, but the bearish candlestick opened and closed below the previous candlesticks, the previous bullish candlesticks. Whenever you spot this, it is said that an engulfing has occurred, a bearish engulfing has occurred. Now, when you also move up, let me show you. Let me show you. Now, look at this. After forming this shooting star here, there was an engulfing in the market. The recent bearish candlestick closed below the shooting star, engulfed the shooting star, and the market sold and sold. Engulfing is just like enveloping or covering the previous candlestick, and it's a powerful tool in the market. Oh, just take a good look at this. Now, the market was actually selling, but this bullish candlestick here came and closed above the bearish candlestick, you have to watch it clearly, clearly. You have to watch it clearly, and the next candlestick you can now take your entry in the market. And at the end of the day, you can now see that the market bought and bought and bought and bought and bought. The market bought hell. That is it for engulfing candlestick. You have to watch it closely, and the body of the candlestick must be definite. It must be definite. That is, you must see that it's closed either below or above the previous one at a sensitive support and resistance zones. Do well to send your questions on either the Telegram channel or wherever you want to send it on our WhatsApp platform and the rest. I listed our WhatsApp platform. On Instagram, you can see us there as Akujobi Godwin FX. It's on the description. On Facebook, you see it Akujobi Godwin FX. On YouTube here, Gwing FX. On our WhatsApp +2348148397861. There are other forms of candlesticks. We have the harami. We have so many types of candlestick formation. But I'm gonna stop here. Read them up, and if you need some ebooks, you can as well chat us up, and we help you with that. It will help you with that if you need some ebooks. You can see that this particular candlestick here engulf the previous bearish candlesticks. So that is it for today. That is it for today. There are so many things, so many things, so many things to learn. Do well to like, share to your friends, and subscribe to this channel so that whenever we post, you learn more. Whenever we post, we learn more. Not only following the channel, share to your friends that are willing to learn, and those of them that are learning how to trade, those of them that are willing to learn how to trade, share to them for them to learn how to trade. As a way of recap, we treated types of candlesticks. And we started with the doji candlestick, the body of the candlestick, the dynamics of candlesticks, and the rest. So do well to share, like, subscribe, and on the notification button. Thank you very much. Bye.